Hey, it's Clay, and this will be a video chart on ticker symbol SPY. We will take a look at the 30-minute time frame. If you're not sure what I mean by 30-minute, I do offer an explanation video at that link. So if you go there, I'll explain in detail. Well, cue the dramatic music because we have some big drama going into next week. And now I realize post-market right now, as I'm doing this video, it's actually below these areas, but your guess is as good as mine. We have all of post-market, and then we have the entire weekend, and then we have pre-market. So we're aware this thing's going to open up. We'll just have to wait and see. But the technical dynamic that all traders are going to be watching and wondering about. So this is by no means some sort of great discovery on my part. I assure you, people that use charts, understand charts, are going to be watching this level. And I make that comment because when a lot of people are watching the same level and wondering the same thing, call it a self-fulfilling prophecy, call it whatever you want. It can produce some very dynamic price movements. And that's exactly what we have here at this area, which sits at, what is that to be? The 228 mark. So 228 is going to be an area where you can see right there the price bounced from it, and then essentially right where the price temporarily found some support. Like I said, as of right now, as I record this in post-market, in fact, I'll just bring that over real quick. You can see that the price is actually down below that level at 227, but that is post-market, so you don't want to put too much weight into that. But the point here being that the price is currently up above that level. So it really brings the question, well, let me take a step back real quick. In the event there's some sort of bounce to the upside, that purple line, which I've talked about time and time again in the past videos, the 50-period moving average, remains a massive problem for the bulls. You can see broke above it, could never maintain above it. So I should note that the problem is not breaking up above it. The price has broken up above it many times. Right there was another break above it. The problem is actually staying up above it. Case in point right here. Yesterday, broke above it, couldn't stay above it. Earlier today, broke above it, couldn't stay above it. So that remains the key level of resistance. But now as far as levels of support, especially if that 228 is officially broken, we need to go to, actually, I think, let's go to the weekly chart because I think that's going to make it easiest to see. So we are now in the weekly chart. As a friendly reminder, if you're maybe new, that means each one of these candlesticks represents an entire week. So if 228, just double checking, yeah, does not hold, and it's not looking so good, then at this point, no such thing as a guarantee, but it would not be shocking at all to see the price and then potentially drift down to right around the $220 mark, which is essentially this breakout point from back here in 2016. And we'll see what happens with it. But yeah, that weekly chart, price tried to bounce, got hammered all the way back down and closed at the lows of the week. So there's a lot of bearish momentum going forward. So personally, I would not be shocked in the least to see 220 next week. But like I said, we'll see what happens over the weekend. And as crazy as things have been, who knows? Maybe this thing will gap up over $300 on Monday. We'll see what happens. But as of right now, a lot of technical traders are going to be watching that 228 mark, myself included. So we'll see how it plays out. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.